Hi, this is Paul from globaltradingsoftware.com. I don't look at this very often, but I wanted to re-establish connection with our roller coaster indicator suite because it's very effective. And what it is, it's a play on Stochastic MACD Cross, but it's on steroids. So basically, we're looking for that roller coaster motion and looking for those changes of direction, using the principles of Stochastic MACD Cross and then adding some other secret sauce to it. So this is ROKU on the 4-hour time frame for the last 6 months, and I want to go through the roller coaster trades that have happened in the last 6 months. So we're going to start back in May 2021. I'm going to use this green arrow here to help me sort of identify here. So what happens is we print a risk where the stop would be in this red area. We have an entry in the green here, and you can see then it starts to move down like this. This red line here between the two purples is actually your trailing stop position. So every 4-hour candle you would adjust your once it starts printing, you adjust your trailing stop. You can see this is the downward momentum of the roller coaster, and then it picked up an upward momentum of the roller coaster. Stop here, entry here, well, then we get the trailing stop being printed automatically here. We then get a down signal, but it doesn't trigger. We then come back up and we get an up signal with a green line just here, and then there's the stop just underneath. And then as we start to move forward and up, the software automatically prints the trailing stop position. Trailing stop is taken out, comes down a little bit, not enough to give us a short, and then the software recognizes actually we need to get back in the long again, starts to print in the trailing stop, profits taken when the trailing stops out. This is the roller coaster motion, and then we're coming down again, so we print an entry here. Stop is at the top, so the risk zone is in there, and then stop, the price action starts to come back down, just tips us out of that trailing stop here, prints a potential long but never gets taken in, comes down, prints a potential long, never gets taken in, comes back up again, and this is where we are right now on this. So I'm going to zoom in on this section right now and just go a little bit bigger on here. Let's get rid of that now. So this is where we are right now. So you see this previous long here was printed, but it never went through the start line. This short was printed, this was the start line, the green here, this was the risk line, and then as you can see after a certain amount of time, so we are about 10 candles in, we're risk free and we're starting. This is our trailing stop position, and we're still in this right now. This works best on Heikin-Ashi candles. It's good for day trading, good for swing trading, all sorts of instruments. You just need to find the groove. Where is that stop, that futures contract, that forex pair? What time frame it is in the groove? Where is it going from overbought to oversold to overbought? Put in then the Stochastic MACD Cross, all the other EMAs that we consider, the entry strategy, the trailing stop strategy, and it all gets printed on your chart with a roller coaster. But what it does is takes away all of that noise on your chart. It gives you an entry, a stop, and then starts to print your trailing stop position all the way down this line. So as you can see, for the last 6 months, there's not been a losing trade with a roller coaster on ROKU on the 4-hour time frame. So it's in the groove. And what it does is gives you a lot more confidence moving forward. If this trading stop gets taken out, for example, and we print a long and it goes through that start line, through that green line that we see for the longs there, or the shorts, we then take that trade because we have the confidence to take it, because in the last 6 months we've not had a losing trade with ROKU on the 4-hour with the roller coaster. Hopefully this helps. Speak to you all really soon.